Today, XRP rises just slightly for the week, even after soaring midweek. BlackRock's head of digital assets says staking could be a huge step change for spot Ether ETFs. And EY's global blockchain lead, Paul Brody, explains why there's a disconnect between Ether's price and developments on the Ethereum network. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red to cap the week. As of noon Eastern, Bitcoin was down more than 1% at the $83,000 level. Ether inched lower by 1% to just under $2,000, and Ripple's XRP token lost nearly 3%. The moves came just before the SEC's newly formed crypto task force kicked off a roundtable series focused on defining the security status of digital assets. The meeting is taking place this afternoon, and we will have an update for you on Monday. Taking a look at the week, as of noon, Bitcoin is down more than 1%, on pace for back-to-back weekly losses and its fourth negative week in the past 5. Ether and XRP were little changed on the week, though Ether is on pace to break a 4-week losing streak, its longest weekly slide since May 2022. And XRP is on pace for its second weekly gain in 3 weeks. The token was only slightly higher for the week, even with that big boost on Wednesday that sent the token soaring after the Ripple CEO Brad Garlinghouse announced that the SEC is dropping its lawsuit against the crypto company. All right, let's talk about the top stories. BlackRock's head of digital assets says staking could be a, quote, huge step change for Ether ETFs. Staking is a way for investors to earn passive yield on crypto holdings by locking tokens up on the network for a period of time. While the Ether funds haven't been as popular as spot Bitcoin ETFs, Robert Mitchnick says sentiment could change if some regulatory wrinkles holding them back get resolved. Speaking at the Digital Asset Summit yesterday, Mitchnick acknowledged that staking yield is a meaningful part of generating return in the space, and the inability to earn a yield on Ether ETFs is likely one of the things holding them back. He noted that there's no simple fix, saying there are a lot of fairly complex challenges that have to be figured out. The SEC has historically viewed some staking services as potential unregistered securities offerings. However, a more crypto-friendly SEC has been moving quickly to change course. So far, no official word on the agency's current stance on staking. Next, sticking with staking, the New York Stock Exchange has proposed to allow staking in Bitwise's Ethereum ETF. In an SEC filing, the exchange argues Bitwise could stake securely using a strategy called point-and-click staking, so the staked ETH wouldn't leave Bitwise's custody. The filing says this would reduce the risk of theft while the asset is staked. It also says the risk of loss through slashing would still stand. That's when the network penalizes validators for breaking rules. If approved, the proposal could make Ether ETFs more attractive. Adoption has been slower than the spot Bitcoin ETFs that were launched about 6 months prior. Finally, Kraken has agreed to acquire futures trading platform NinjaTrader for $1.5 billion. Kraken says this acts as a step towards its goal of expanding across multiple asset classes, both in traditional finance and crypto. Kraken co-CEO Arjun Sethi said the development is, quote, the first step in the company's vision of an institutional-grade trading platform where any asset can be traded anytime. All right, turning back to Ethereum for our main story. Earlier this week, I spoke with EY's global blockchain leader, Paul Brody, while he was in New York City for the Digital Asset Summit. The author of the book, Ethereum for Business, sat down with us in our studio to discuss sentiment at the event and the disconnect between Ether's price and major recent developments on the Ethereum network. Paul, thank you so much for joining me in studio for Crypto World. You are here for the Digital Asset Summit in New York. You just came from there. I think you were there yesterday as well. What are your big takeaways from the event so far?
So first of all, what's really the tone and tenor of this event is so different than some of the other ones that I've been to. It's very professional. People are really looking at quite serious data. You see investment professionals talking about the fiduciary responsibilities of pension funds and serious investment programs, what the rules are going to be around asset tokenization, what the roadmap looks like, what the economic forecasts are. It's a professional investor meetup with some very clear, practical approaches, and it's way more practical this year than it was last year or at any prior time, I think.
The market is a little funny right now because we're coming off the euphoria of all of the announcements we got out of Washington after the election and the inauguration, and yet we are kind of stuck. We've been stuck below 90K for Bitcoin for a while, which I know is frustrating to some, and others are like, look at where we were just a few months ago. But does it seem like investors at the event are energized and invigorated, or?
Absolutely. Investors are energized and invigorated. I was very much expecting you to ask about this dichotomy between the kind of very bullish overall environment versus the specifics of the asset prices. We actually released our survey of institutional investors last night. And I would say the most important takeaway when I look at the conference and I look at our survey of institutional investors is it's very important to separate the short-term ups and downs in the market that are connected to interest rates and strategic reserve policies and other things versus what we see as this huge secular long-term trend. My own forecast is that this is a 20 to 30 year cycle of digital asset and cryptocurrency adoption.
Speaking of that dichotomy, I want to kind of zoom in on Ethereum. I mean, you are Enterprise Ethereum Alliance. You have the book on Ethereum for Business. And Ethereum also, even more so, has been stuck. It's gone through what so many have described as an identity crisis. The fee revenue has come down since the last big technical upgrade. The ETFs have not had the same amount of appetite and enthusiasm that you saw with the Bitcoin ETFs. What should we make of this at this point in time? ETH under $2,000, but again, a very bullish setup. What are we looking for here? What are we waiting for?
So there are always two issues that I come back to, and I think it's super frustrating when the world of crypto Twitter gets overly focused on this like Ethereum narrative. There's two major things I look at to disaggregate. Number one, let's separate Ethereum from Bitcoin. These are not the same things. Bitcoin is the asset. And we can come back to Bitcoin in a little bit later, but Bitcoin is fundamentally the crypto asset. And I don't really believe there will ever be any other substantial crypto assets. Ethereum is a platform. 85% of all the real-world assets out there today are tokenized on Ethereum. Almost all the stablecoins are tokenized on Ethereum. They're transacting on Ethereum. DeFi is primarily running on Ethereum. So Ethereum won. So you might say, well, if Ethereum won, why isn't the asset price much higher? And the answer to that is that the value of Ethereum has a calculated discounted cash flow. Now, if we were to go back 3 or 4 years, Ethereum transaction fees were high because demand was high and capacity is limited. Ethereum's capacity prior to the merge and the growth of the L2s was about 1 million transactions a day. Ethereum today has a capacity for several hundred million transactions a day. So you think about the technical performance increases, the capacity increases. Naturally, the price, we can't grow demand. Demand today is in the tens of millions of transactions a day, but it's not in the hundreds of millions. And that means prices for transactions are low, which means the yield on Ethereum is going to be low. And therefore, the price, if it's driven by this discounted cash flow model, is low. But that's a good thing because it's giving companies the confidence that the network infrastructure will grow with their demand volume and that transaction fees will remain predictably low for the foreseeable future.
From an investor's point of view, focusing on the price specifically, we are on CNBC. We're very price focused here. Standard Chartered is one analyst that comes to mind, Jeff Kendrick. He just slashed his price target on ETH for the year. Still really optimistic about the turnaround. I think his year-end target was 4,000, which is far from where it is now, but still more than half from his original $10,000 target. For the investor that is focused on the price and on the return, how should the investor kind of value ETH?
Ethereum is a much longer term play, I think, than Bitcoin. When I think about Bitcoin, I think about it as very much like it is the digital equivalent of gold. And as a result, over time, I think it will behave more and more like gold, and that it will tend to go up when there's geopolitical uncertainty. Ethereum is a growth platform, it's a technology platform, and therefore it's likely to be a relatively slow ramp. One of the things that I think people forget, though, is go back to the dot-com bust, 1999. So, the stocks peaked. Stocks plunged after 1999, but interestingly, technology adoption didn't miss a step. And so after that, what happened was people used the internet, they implemented more networking infrastructure. That grew very steadily, and there was a kind of an exponential process whereby several years later, people suddenly realized, oh, this internet revolution, it really is happening, and the growth is there, and suddenly the valuations went very high again. I would not at all be surprised to see a very similar dynamic where people swing from excessive optimism to excessive pessimism. But in reality, as a technology platform, adoption tends to move pretty steadily at about 20 to 30% a year growth. If you look at e-commerce, if you look at network equipment, if you look at mobile phone adoption, all of these businesses grew in their mainstream adoption phase in terms of usage about 20 to 30% a year for something like 15 to 25 years. And that adoption had very little to do with the macro environment. It had very little to do with the stock prices of those companies. Eventually, they all caught up.
Brody also weighed in on Ethereum's competitiveness among other players like Solana. You can check out his full interview over at cnbc.com/cryptoworld. That's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.